All right, Bulls and Bears, back with another dose. We've got the latest manufacturing data. We have Cybertruck drivers reporting getting flipped off a lot. People making a little finger gesture at these people. For some reason, we're going to analyze that. We got another bank failure. Another bank failed here in 2025. A lot of people expected a lot more banks to fail by now. And we're going to talk about 10 cities where you can find a home for $125,000 or less. They all have something in common. Some of you might know what I'm talking about. Let's go ahead and get right into it. First of all, it's Sunday, January 26th as I'm recording this. The playoffs are on right now. The Chiefs, I believe, are playing the Bills. And I don't watch full football games. It's, what is it, 3? Is an NFL game like 3 hours, 4 hours now? I watch the highlights, but I'm hoping the Chiefs lose. Let me know in comments if you're with me. Do you want the Chiefs to lose? I always root for the underdogs. The Bills haven't won a Super Bowl, I don't think, ever, have they? So I'm rooting for the Bills, but the Eagles are doing pretty good too. Anyways, we'll get into it. The news here, of course, I just like to mention what's going on with most people. That's a lot of viewership happening right now with the NFL. It is a big moneymaker still. It is part of the economy, believe it or not. Entertainment, sports, part of the economy. We're not going to talk about that so much today. Today, though, let's talk about this bank that failed. Then we'll talk about why are Cybertruck drivers getting the bird. I'm talking about the finger bird flown at them. It's very strange. First of all here, though, bank failure 2025. We have, pull up my notes here. Authorities' first bank failure 2025. Shut down a bank in Illinois. The FDIC says Illinois' Department of Financial and Professional Regulation has closed Pulaski Savings Bank. And most of you are like, never heard of it? Of course, it's a local regional bank. They're not going to let any of the big well-known banks fail. I mean, a lot of these banks are well-known in their local areas, just like Silicon Valley Bank, huge bank, millionaires, a couple years ago failed. Most people hadn't heard of it, but it's a very huge institution. This one, FDIC has been appointed as receiver, and they're now in receivership. Says it has to pay $28.5 million from its deposit insurance fund to cover the cost of the failure. So this is one where the FDIC does have the money because it was a smaller bank. But remember, Silicon Valley Bank, the FDIC didn't have the money. They had to go print it, or the country had to borrow it and go further into debt in order to bail out all the depositors and to make these depositors whole, which is pretty silly when you think about it. You have to borrow the money and add it to the debt pile in order to save the people that would have lost their money in the banks. It's pretty crazy how just this whole thing works, isn't it? And if you watch this show, then you may know from previous reports that the FDIC has about less than 3% of the deposit that they need to really cover. And all the banks, if you add them all up, they only have 3% or less. It could be closer to 2 or 1%. I'd have to look. But the fact that it's even below 100% is insane. Like, what is the purpose if you don't have enough money to cover a worst case scenario? But life goes on and everything still continues to go further into the stratosphere as far as the cost of living. Of course, the debt. This is a system where debt has to continue to be piled on in order for it to not completely implode. All right, but let's talk about what's happening with the Cybertruck drivers here. And this is some of them, not all of them, but some of them have reported this. All right, here's how they put it out in the headline. I drive a Cybertruck and I'm sick of people flipping me off. I wish they understood how helpful this car is for me. First of all, why would you care what somebody drives and care enough to want to do this? I want to send them the little your number one signal, right, with the one finger. Why would you want to do that? Right? If people want to drive a certain car, let them drive it. I mean, there's people out there driving vehicles that pollute, not in California because they have to have the emissions test here. But I've seen plenty of cars, black smoke coming out of the tail light, and the smoke gets in people's cars and gets in their, people have to breathe that stuff in if you're behind them. So in that case, you can kind of see somebody making that your number one gesture. But a Cybertruck, come on. I mean, what are your views on the Cybertruck? I mean, whether you love it or hate it or in between, why would you do that? It just doesn't make any sense here. But what she's saying is, she said she wishes people, and this is out of Yahoo via, this is out of Business Insider via Yahoo. What she's saying is it helps her because she actually gets to nap behind the wheel. The long drives exhaust me. until I got a Tesla Cybertruck, which is self-driving. So maybe people don't like the self-driving function. They don't like how it looks. She's a psychologist who drives all over Arizona to do psychological assessments. And I probably should pull up a picture so people know what we're talking about here. Cybertruck. If you don't know, that's a Cybertruck. You've probably seen them. And what she's saying is she gets to nap behind the wheel is what it sounds like. She's trusting the vehicle to not crash. People keep flipping me off because of Musk. They don't understand how the vehicle helps me. She drives a lot. She works long hours. On the days I travel, I most often have a schedule full of disability assessments to conduct. That's mentally exhausting. And the work demands focus and compassion. I credit my Cybertruck, affectionately named Brick House, for helping me arrive for the day without feeling drained. She basically turned to the Cybertrucks and Tesla because of the self-driving feature. So there you go. It's helping some people. There are a lot of people stuck on the freeways for hours, having to commute long distances, having to go to different locations. Whether or not you trust the technology, that's one thing, but come on, people. Let's not flip off the drivers of different vehicles. I know people that have electric vehicles. Most of them love them, and they're saving a lot of money on gas. I've also had a couple people tell me they've had some horror stories with one with an insurance claim that they really had a hard time getting the parts because they were on a kind of a rural area, and it took weeks and weeks and weeks to get the part shipped in and get people that could actually do the repair of the vehicle, the body work. And someone else that said they had some problems with the charging mechanism and finding chargers available at decent hours. So it's a mix of good and bad. Mostly I've heard pretty positive things about them. So either way, flipping people off, come on, man, that's not not necessary. And it could cause road rage. What if you do that to somebody, give them the number one signal, and they get mad at you and they start swerving at you? I've seen videos where people, they're swerving at each other, trying to run each other off the road. All kind of crazy stuff can happen just out of a small incident like that. Let's move on here. Other economic news, folks. Manufacturing. Manufacturing data shows that American companies are starting the year in a very, quote, upbeat mood with the new administration taking over. U.S. manufacturing companies are feeling better about the business outlook. A lot of them are optimistic about the tariffs. I think tariffs are going to backfire in a big way. I hope not. I hope it makes American way of life a lot better. And I hope I'm wrong, but I think it's going to backfire big time. Look what happened in the inflation in the previous administration before that. Inflation is a never-ending, I should say a never-ending war, but it's really not a war because the people creating it are not actually trying to stop it. They're just trying to keep it under control and have prices rise at a slower level. The U.S. manufacturing output index increased to 50.2 in January. That's up from December's 47.7 reading. Quote, U.S. businesses are starting the year in an upbeat mood on hopes that a new administration will help drive stronger economic growth. That's Chris Williamson, chief business economist at S&P Global Market Intelligence. Rising optimism is most notable in the manufacturing sector, where expectations of growth over the coming year have surged higher as factories await support from the new policies of the new administration. Now, the word growth was in there. What does growth mean, folks? It means more debt, more spending, and guess what? For the most part, rising prices. And it's hard to keep spending increasing without prices rising, of course, right? So we're going to see how this plays out, folks. But so far, it looks like a lot of, to me, false optimism. And again, I hope I'm wrong. If I'm wrong, let me know down in comments what you think about that. So 6-month high, not a very long time to have a high. If it was a 10-year high, that would be something different. So I think there's a mix of how I'm feeling, kind of cautious, kind of skeptical, versus a lot of optimism. And a lot of it is drawn and divided into political lines, kind of the left versus the right thing here. So we'll see how it plays out, folks. All right, we know this is mostly based on spending and debt accumulation, lending, spending, and finish it for me, you've heard this before, and pretending the economy is good. Here's a headline that pretty much sums it all up here out of USA. Is it USA Today? Yeah, the economy is strong. Why are more Americans barely making credit card payments? That's because the quote unquote strong economy was built based on debt and spending. And now what's the saying go? The chickens have come home to roost? Or is it the rooster? The rooster would make more sense because the rooster is roosting. The rooster has come home to roost, but I think it's the chickens. Anyway, doesn't matter. The economy's strong. Why are more Americans barely able to make their credit card payment? Because, folks, it's all based on debt. Let's look into this here and see about how bad is it. Well, we talked, 1 or 2 reports ago about how more than half of Americans now, or more, not more than half Americans, more than half of credit card holders that carry debt or that use credit cards are not able to pay off their monthly balance in full. In other words, they're increasing their debt and the interest is getting tacked on top of that here. The share of active credit card accounts making just the minimum payment hit a 12-year high from July through September 2024. So the second half of the year, based on data from the largest banks in the country. As credit card balances swell, the share of delinquent balances is also worsening, but yet we're optimistic. We think the new administration is going to come in and fix this. What do you think they're going to do? They're probably going to want lower interest rates. It's not probably. They already talked about that. Hopefully, the central bank won't be crazy enough to lower interest rates, but we know that's what the new administration is pushing for, lower interest rates, because they know without the borrowing capabilities that low interest rates bring, that the economic illusion crashes. It crashes, folks. And it's only a matter of time. I mean, people are in awe about how long this is taking to play out. Like, why haven't we seen a massive implosion in the housing market? Why haven't we seen an implosion with cars getting repossessed and car loans going default and delinquent? Why aren't we seeing a massive explosion of people not being able to pay their credit card bills? Well, that's because more debt is being pumped into the economy, into the system. And when people can spend more, companies can give higher pay for the most part, but a lot of it's also, remember, a lot of the handouts that are being given out to people right now. So it's not all about wages. That's part of it, but it's definitely not all about wages. All right, tie in everything else, the down payment assistance, keeping the housing market from completely imploding. Even with all the thousands of down payment assistance programs, we still see a 30-year low in real estate transactions happening right now. So the volume has dropped off of a cliff. The price has not dropped off of a cliff. Remember, when prices drop big time, you usually see that in conjunction with volume rising because people are trying to get out of their house because so many people are struggling to make their mortgage payment. We're not seeing that right now. We're seeing people cling onto their home and their low mortgage rate, especially with what we saw over the past few years with the lower rates over the past 10 years, especially over the past, 3 to 5 years, much lower rates. Onto this data, though, here, more on this. The disheartening truth is that the upper income consumer segments can largely offset the struggles on the lower end Wells Fargo economists. That's true. The top 30% can keep things rolling. They can continue to buy up stocks in the stock market. We know that most stocks are owned by the top 10%, not just most, like 90%. So things can go a lot longer than you think with the big money out there, and real estate too. Big money coming in buying real estate. Otherwise, the sales would have been much lower. Right? Crazy times, folks. Let me know what you think about this down in the comments. Again, record number of Americans only making the minimum payment. Here's another headline for you, just to show you that I'm not making this up. Only making the minimum, a record, worse than the financial crisis. So how long can this continue? Right? Will they just start erasing debt just like they did with student loans? And when people start showing the inability to pay off this debt, well, they're already starting to show it. Can't make their minimum payments. And at 20+% interest rates on the credit cards, you can only go on for so long. I mean, we're talking months and months. I mean, I've said here time and time again, I think it's going to happen here. It's going to happen here. It's going to happen here. Nobody knows the timing. Why? Because they can continue to kick the can down the road with even this credit cards. They could come in and forgive a bunch of credit card debt. You think they did it with student loans and they can't do it with credit card debt? Of course they can. They can come in with all kinds of stuff. Just look at 2020. 2020 should have been a complete deflationary implosion. We should have seen home prices drop down way lower than 2008. That bust should have been much bigger. But what did they do? They came in, they completely propped up the markets, they sent out checks, They stopped economic activity to prevent deflation. And you think they can't do it again? I think you're crazy. You're insane to think that. All right, we're going to get into the 10 cities where you can buy a home for $125,000 or less here in a couple minutes. And all those cities have something in common. A lot of you probably already know what I'm talking about. But first, look at this here. Half of millennials depend on tax refund to make ends meet. Half. So without the tax refund, they're in big trouble. See what it says. So the average federal tax refund in 2024 was $3,138. 15% of millennials would take a year-long vow of celibacy to avoid filing. Of course, nobody likes doing this. According to a Credit Karma survey, 37% of taxpayers rely on the refund to get by, but 50% among millennials rely on that refund to get by. What would they do without the refund? What would they do if they changed the tax tiers where they actually didn't get a refund, right? So people are skating down the edge, folks, and they're finding ways to keep things from imploding. But then again, it is already imploding for some people. When I say it's not imploding, not on a mass scale, but if you look around, there's a lot of people that have already imploded, and they're in big trouble here. But let's talk about the 10 cities where you can buy a home for less than, and have a $125,000 median price or less, right? So the payments vary depending on your down payment, depending on mortgage rate. So what they're talking about here is $125,000 purchase price. And here they are, folks. And if you thought they all had one thing in common, you said cold and ice and being in the Midwest, or what's called the Rust Bucket, you are correct, folks. Cleveland, Ohio, number 10, median home value, $102,000. Erie, Pennsylvania. I'm getting cold just reading these names off, aren't you? $98,200. And it goes from highest to cheapest, right? Top 10. Dayton, Ohio. And this is just the major cities. There's a bunch of smaller cities around these cities where prices are also similar, but these are the major cities. Dayton, Ohio, $97,700. That was number 7. And Camden, New Jersey, $94,200. That was Camden's number 7. Dayton was number 8. Muncie, Indiana, number 5, $93,900 median price. Gary, Indiana, $93,900. I just watched a documentary about a haunted house in Gary, Indiana. Decatur, Illinois, $92,200. Also, Gary, Indiana is where Michael Jackson family's from, right? Number 3, Canton, Ohio. Back to Gary, Indiana. I used to drive from Gary, Indiana, or from southwestern Michigan to Chicago, having to go through Gary, Indiana. And I remember the smell. I think there was a lot of manufacturing there. I can remember a bunch of factories. It's back when I was a kid. I remember a bunch of factories there. I'm not sure if it smells bad today, if it still has that going on. Maybe a lot of those companies moved out of the country, or at least out of Gary, Indiana. Number 3, Canton, Ohio. Number 4, did I skip number 4? Decatur, Illinois, number 4. Number 3, Canton, Ohio. Number 2, Detroit, Michigan. Number 1, Flint, Michigan. How crazy is it that just about all of these are in just 3 or 4 states? So we got Ohio, Michigan, Indiana. So all in that area around the Great Lakes. Ohio, New Jersey, well, except for New Jersey. So there you go, folks. There, if your dream of owning a home is still within reaching distance, all you have to do is move to one of these states and run one of these cities. And there you go. You're going to be shoveling some snow. You're going to be scraping ice off your windows. But if you're somebody that's not having to go out in the elements a lot, especially from like November through February, then it may be worth the venture. And maybe you're already there. And maybe you're in a nice area and you're loving it. You know what I mean? All right, a couple more things before we get out of here, folks, to show you what's really happening right now. Subprime car loan delinquencies on the rise. And folks, listen to this. A 28-year high. So we need to go back to, 20 years, the late 90s, folks, to be at a level this high with subprime auto loans. Subprime auto loan delinquency percentage, which means borrowers are 60 days late or more past due on their payments, folks. A 28-year high. So there you go. Half of millennials can't get by without their tax return. What else do we talk about today? The people getting the bird, driving the Cybertrucks. Don't flip people off for that reason, folks. And what else do we talk about here? Record number of Americans only making the minimum payment on their credit cards. The 10 cities, $125,000 or less. So there's still some hope out there for the quote-unquote dream of home ownership if you look in the right places, and those places are cold places. That's it, folks. We're going to wrap it up, and we're going to see you down in comments hopefully on this one. Please let me know what you think about all this, and I'll be reading your comments. And everybody keep stacking. We're going to be back probably, Monday, tomorrow. Big love, everybody. Bye for now. Peace.